Hello and welcome to Exchanges for another week. I have probably held off on this subject since I started this podcast for a pretty decent reason. I needed to find someone independent, completely open-minded, and be able to actually speak their mind around property. It is the one thing I've skipped over, and I've deliberately done it, but property is on everyone's lips in this country. In fact, it's more than that. It's pretty much the biggest driver in everybody's portfolio. And so I wanted to get somebody that is absolutely the forefront, has been at the forefront of this for the last 20 years, and can speak, as I said, independently. So I got on Cameron Kusher, who needs no introduction if you've been watching particularly property media, property spaces, property blogs, and property research for the last 20 years. He's been an absolute incredible person in this space. So who better to get on to discuss the property market than Cameron Kusher? Cameron Kusher, welcome to Exchanges. I think before we start, let's put this out there. We're not going to be able to cure the housing crisis just by having a bit of a banter session, but we can have a really good crack at it. There is so much despair, optimism, glee, pessimism at the moment in housing. How are you evaluating where we sit right now?
Yeah, it's a really good question, Evan. Look, I think we're in a challenging situation. I mean, we've gone through the pandemic and we've seen interest rates cut to their lowest ever level, and we've seen property prices boom. And if you remember back at the start of the pandemic, there were a lot of people calling for property prices to fall, 25 to 30%, and they actually increased by about 45% over that period of time. And even once interest rates started to rise, we continued to see prices rise in most markets. Melbourne and Hobart were probably the exceptions to that. And now we're facing the prospect of interest rates starting to come down. We've already had 25 basis point cuts. And we know that when interest rates are reduced, borrowing capacities increase, and that does tend to lead to higher property prices. Ultimately, we're getting higher property prices over and over again because we've got way too much demand and we don't have enough supply. Now, the federal government wants to deliver 1.2 million homes over the next 5 years.
That's not going to happen.
No, I mean, they've even put out, the National Housing Supply Council have said that we're going to get less than 1 million homes. And if you actually take into consideration demolitions, it's probably going to be about 850. The housing market is a challenge because there is that excess demand and there's nowhere near enough supply. And I think we'll start to see supply improving over the next couple of years as interest rates come down. But we just can't deliver the quantity of housing we need for how quickly our population is growing and how many people want to own a home.
Okay, awesome. Lots in that. So first and foremost, can you sort of rebut, and that's probably the right word, those that out there that suggest that interest rates are not the lever that moves the housing price market? Their point in point is, as you just pointed out, 2021 through 2023, 13 rate rises. The housing market still kept going. Now it's on the way down. Housing market's still going, blah, blah, blah. So can you rebut that point first?
Yeah, definitely. I mean, every time interest rates are changed, whether they're increased or they're decreased, the borrowing capacity changes by about 2 to 3%. So on the way up, when interest rates are rising, that means you can't borrow as much. And that's why, even though prices were still rising, in most parts of the country, we were seeing that rate of price growth slow. When interest rates come down, your borrowing capacity increased by about 2 to 3% each cut. And at the moment, the expectation is interest rates are going to fall by 100, probably to 125 basis points. So borrowing capacity is going to increase by probably 10 to 12 percentage points with those interest rates coming down. And most people will look at that as, okay, great time to come in and start investing again, great time to upgrade my home. And of course, a lot of people that already have a property have seen a significant increase in their equity. So it's just the case that, as interest rates come down, they can borrow some more and they can start purchasing again. So I think it's inevitable that we will see price growth on the back of these lower interest rates, and interest rates are the main lever that move the housing market.
Second part of your previous answer that I also want to pick you up on is that demand concern, right? So I completely concur. The demand is ever growing and ever greater. I would argue, and I want to get your thoughts on this as well. It's not just migration, right? It's not just migration that's driving the demand. We've now got a government, both sides were calling on it, but we now know the government policy, which is the 5%, 50% guarantee. Again, that's a demand-led policy. What what are we going to, and how do we deal with this concern? Because again, we'll come to supply, but the demand side, is it because of the fact that we want to live where we work, or is it because the way that Australia's cities and infrastructure is built that creates the demand? Is it also things like government policy? That's the question that I think I also need to get you from is the demand side.
Yeah, I mean, if we look at demand, we didn't have any population growth basically during the pandemic and prices were rising. So that tells you that people that were already here wanted to buy properties. Remember,
Yep.
30% of the population's renting. Most of them probably want to move into their own home at some point. And then when the international borders did reopen, we've seen the strongest rate of population growth ever. Now, most of those people that have come in as students, so they're not buying a home, but they're renting a home, and that puts pressure on the rental market. And as the cost of renting's increased, more people have gone, well, maybe I'm better off getting out of the rental market and buying my own property. But in terms of the government, I think if we look at what they continually do, it's demand side stimulus. It's not fixing supply. And you talked about, from January 1 next year, a first home buyer can buy with a 5% deposit and the government will basically cover their lender's mortgage insurance.
Yeah.
That's more demand side stimulus. I live in Queensland. The state government announced today that they're extending the 30,000, not today, but earlier this week, extending the $30,000 first home buyers grant for brand new properties. And most states have got some form of that. What that is doing is getting more people into home ownership, but it's getting them into home ownership at higher prices. And for me, the biggest problem with these policies is it's more demand when you've got limited supply, but also it just means that next time, the next cohort of first home buyers that come through are going to need even more stimulus to get into the market. So the first home buyers grant used to be 7,000, 14,000. Here in Queensland, it's now 30,000. What's it going to be in 5 or 10 years? It's going to be a $50,000 first home buyers grant. But you can't even get politicians to say that they want property prices to come down. I mean, in the election campaign, we saw Peter Dutton say that we want prices to continue to rise. And we saw last year that Claire O'Neill said we don't have a policy where we want property prices to fall. We want prices to rise at a more sustainable level. Now, that's very difficult to manufacture that. And realistically, if you want housing to be more affordable, you need housing to be cheaper. That's the easiest way to do it.
I'm going to throw the absolute hand grenade question at you there with what you just said, which is property in Australia becoming the greater fool theory? Is it this whole concept that, we're buying something, and I'm going to say this because I want to come back to it, a non-productive asset for the hope that somebody in the future is going to buy it off us at a higher price? Is that a fair comment?
I think so. I mean, I think there's so many people out there that have this view that, you buy a property, you hold on to that property, and it increases in price. And you look over the last 30 years, it's increased by about 7% every single year. And then someone else is willing to come along and buy that property off you, and that allows you to upgrade. But I think it's, it doesn't actually play out that well, because what happens is, yes, your property's gone up and you've become wealthier, but most people spend their life upgrading their property. So, they move from their initial property into something nicer. They get a bit of equity in that and they want to move somewhere nicer. The property you're buying has also got more expensive. So yes, you have seen a lot of growth in your equity in your property over that period of time, but your next upgrade is going to cost you more. You're going to have to take on more debt. So it is a bit of the greater fool theory going on. And I actually think that's why, me personally, I thought, I'm only in my mid-40s. It's like, should we actually downgrade our property? Wouldn't it be nice to be in your mid-40s and have no mortgage debt? Is that something that people start thinking about? Because just taking on higher and higher levels of debt is just pushing prices up. And me, and I know a lot of people my age also worry about our children. I can't see a situation where my children are going to be able to get into the housing market without some sort of help from us. And I think that the amount of assistance we're going to have to give the children to get into the housing market is going to be very sizable as well. So I think as a society, we need to think more about, is this persistent growth in property prices actually doing us well? Or, is it the reason why productivity in Australia is so weak? Is it why household spending in Australia is so weak at the moment? And I think it is.
Yeah. So We've got so much to talk about. Right. On that, because I was drilled on this a couple of days ago. I did a presentation and I said pretty much similar things. So the whole idea that, one of them that you just discussed there was around, do and should you buy the cheapest possible home, get debt free, and actually invest it in other things? Because you either put it into investment properties, deductible debt, we'll come to that in a minute as well. You can put it into the share market and get technically a better return rather than 7% per annum, because that's technically what it is, not including gearing. You can get 9 and a bit percent geared up in Australia, or double digit overseas. Then you've also got the rent vesting scenario, and that's another thing to discuss. But the productivity one is the interesting part of this. So there was a stat that came out this week that showed it was either 4.1 or 4.2, depending on the rounding, times annual GDP is the total value of Australian property. So I think it's $11.12 trillion. 4.1, 4.2 times national GDP. To put that into consideration, it's about 1.68 in the US.
Yeah.
How do we move that? Because this is a productivity question, right? It's not arable land. You can't farm your house. You can't really, actually make your house productable. No, that's not a word. Sorry. Productive. What is the answer to that? Because this is the other thing. We've now become A, so obsessed with it. B, as you've just pointed out, it's this constant upgrading of the home on the home on the home, which becomes also an incredible nest egg. How do we get around that problem?
I think this is the problem, right? I mean, if you look at the breakdown of household wealth, about 55% of household wealth is in residential property.
Mm-hmm.
Most of that's also in the value of the land rather than the dwelling. So it's the land that appreciates in value. Now, if you strip out superannuation, which you obviously can't tap into until you're in your 60s, about 65% of household assets are residential property assets. And I really think it's kind of got to this stage that it's too big to fail.
If
we did have a situation where property prices fell, say 25%, 30%, the devastation that would have on the economy would be huge. And banks would stop lending, a lot of businesses would go out of business. We'd see unemployment go through the roof. So we've got to this situation where the housing market,
spending would collapse, confidence would collapse, because you're right, the wealth effect would all of a sudden evaporate overnight. So, and that's why, as you said, politicians can't say it. They do not want the housing market to go backwards, because it is this very, very fine line. Let's use the RBA's narrow path.
Yes.
Of dealing with confidence, spending, and investment that is so now basically bedrocked, and that's a deliberate pun, to the house. Because it's not a home, it's a house, it's an asset, and that's where we've got to.
Yeah, and I mean, a home is an interesting thing, right? Because it's shelter, and that, especially on Maslow's hierarchy of needs, shelter's number one.
Yeah,
but it is also an asset, and we've built a system whereby property prices go up. Now, obviously, we've got an inflation target of 2 to 3%. Property prices have escalated at a pace far above that 2 to 3%.
And just to interrupt you there, just to those of you listening out, the other thing that's so fascinating about what Cameron's saying is that technically house prices or asset prices are not included in the in the annual inflation budget data. So it's actually outside of it. And so, yeah, if we actually included it, what you're about to say is that it would be a completely different story.
It would be a completely different story because, as I said, prices have risen at about 7% every year for the last 30 years or so. So we've built this system. So I think the reality is no government is going to want property prices to fall. And if they do, we've seen periods where they fall, but they fall for a short period of time and then they bounce back pretty quickly. But we do need a situation where price growth going forward from here is much slower than it has been in the past. And the way to deliver that is to increase the supply of housing. Now, that's a lot easier said than done, because if you look historically, even the Housing Accord target of 240,000 new dwellings every year, we've never built 240,000 dwellings per year ever.
What was the record? I think it was 2018, where it was like 238 or 280. Yeah.
I think it was 236. So it's been just shy of that.
Yeah.
But also, because we've got this population of Australia growing so rapidly, we also need to deliver a lot of infrastructure. And not completely, but people that build houses or build apartments and people that build roads and hospitals and everything you need for a growing population, there is a lot of competition for those staff. So when we have this huge infrastructure project going on to support this big population growth we've got going on, that takes people away from building the housing that we also need. So I think governments need to get smarter about prioritizing the infrastructure we need. They need to look at ways to actually allow more housing and approve more housing quicker. But we've also got the problem in Australia that most new housing only gets built when there's a level of pre-commitment to that housing. So a property developer will say, I want to build a 400 400 unit apartment in Melbourne.
Yeah.
They'll go to a financier. The banks haven't been lending to anyone, so they've been going to private credit. So that costs more, higher interest rates. But they've been saying, okay, you can do that, but you need to get 60% of that pre-committed before it goes ahead. And at the moment, particularly in a market like Melbourne, where you've seen very little price growth and we've seen construction costs go up about 40%, a brand new property costs a lot more than an existing property. And getting that level of pre-commitment to go ahead with the project is a real challenge. And that's why we've seen most developers delivering stock that's targeting a downsizer and a premium buyer, because
isn't it per square meter more like just incredibly expensive? It's like 910 per square meter per unit in a 400 block. Like, it's something incredible, right?
It is. And the premium over an existing price is about a 20-25% premium. So
wow.
trying to get a young person that wants to buy their first property to buy an existing, a brand new property as opposed to an existing property, they're just not going to be in a position to do that. And I think that's one of the reasons why we do see governments giving, stamp duty waivers if you buy something brand new. But is that really the right policy? I think we need to look at ways to help developers access the finance they need. We need to look at ways that we can reduce the cost of new development. Now, new development, a new house, a new apartment, everything is 10% more expensive because you've got GST on a brand new home when you don't have it on an existing home. Maybe that's something they look at, but obviously then government's forgoing GST revenue that they need.
Mm-hmm.
Even just things like getting things approved quicker, reducing the amount of information that a developer needs to give a council to get that approval. That obviously solves their costs. And also things like infrastructure charges. A lot of that has to be paid up front. Maybe they should look at the fact that the government should be funding more of that infrastructure. All those costs can be paid once the project's completed and developers actually got their money, rather than having to find that money and fork it out at the beginning. But we need more housing, and we need federal, state, local governments to get on board, assisting on delivering more housing, but delivering more housing at a cheaper price as well.
Well, okay. Again, awesome answer. Lots in it. Let me go through a couple of things. There was a discussion in the last month or so about the productivity of construction in this country and about how it's gone. And do you think that is part of the answer, that we need to become better at the way that we produce houses, the way that we actually, use fabrication? So we're not a country that uses, fabricated walls. We don't use certain techniques and materials that, Europeans use. Is that also part of the discussion?
I think it has to be. I think the big thing with prefabrication and all of this, though, is we also need to make sure we maintain quality. And this is one of the challenges, even with the 240,000 new dwellings a year. Go back to 2017, 2018, when housing construction was booming. That's also when we had, the Opal Tower and the Mascot Towers and the Opal Towers in Sydney. And we had
catching fire.
Yeah, we had all these issues with the quality. So we need to find ways to build quicker, but we also need to find ways to maintain the quality when we do build quicker. And I think that's my biggest concern, that if we do deliver housing stock quicker, are we going to find that people are cutting corners? That same report obviously found also that one of the big challenges with productivity in the housing construction industry is that there's a high prevalence of subcontractors rather than bigger businesses.
Yeah.
And subcontractors are less productive because they don't benefit from economies of scale. They don't invest in better techniques. So maybe it's also a case of, changing tax and changing policies to encourage businesses to have these skills themselves rather than outsourcing these skills. And then we do get more productive. But we've been seeing housing productivity go backwards for the last 20, 30 years. We're seeing properties taking longer to build than they ever took before. And that just means that this shortage of housing we got continues to be exacerbated because we can't deliver what we need in a timely manner.
You talked about stamp duty and all that kind of material. You talked about also, governments needing house prices to continue to be there for confidence, spending, the economy, etc. else. My point on that, and what I'd love to get your thoughts on, is that the other thing about it is that the government's the counterparty, right? So they need property prices to go up because most state government balance sheets at the moment are 40 to 47% of revenue comes from stamp duty. Yeah. How do we also wean ourselves off this? Because stamp duty is a big income producer for the states, a massive burden for transfer, a massive, barrier because it's a transactional tax. Yeah. How do we get past stamp duty? Because as I said, also the government, they are budgeting on the idea that house prices keep going up because that will therefore help their stamp duty revenue keep going.
Yeah, look, I've written a lot about stamp duty.
I
despise stamp duty as a tax, and I think that
it's horrid.
It is, and they should replace it with land tax. Now,
that in payroll tax. Payroll tax is just a shocker.
Yeah. If you look at stamp duty, now stamp duty is levied on commercial properties as well, but if you look at just the residential market, on any given year, about 4.5% to 5% of the properties that exist in Australia sell. So you're collecting, 40 to 50% of the taxation revenue for state and local governments from 5% of properties that sell in any given year.
Yeah.
So from a state government perspective,
there's
a huge risk because if the market's really bad for a couple of years, then you've got this huge hole in your budget. If it's really good for a couple of years, you've got a lot more revenue coming in. But if you transition to a land tax on everybody, then you can actually plan things a lot better because you know that every year you're going to have this. And I actually think if you have a land tax, it will encourage local governments and state governments to approve more housing and do it quickly, because if they want to grow their revenue, obviously they could lift the land tax rate, but that's going to be very unpopular with the voters. But the other way to grow land tax revenue is to build a lot more housing and get a lot more taxpayers into your area. Now, the challenge is always going to be the transition, because people are going to say, I paid stamp duty 2 years ago, I shouldn't now have to pay land tax. And there's a way around that. You go, okay, if you've bought anywhere in the last 10 years, you get a discount on your land tax until you've been in your property for 10 years, and then you transition directly to paying land tax every year. Anyone that's owned their property for more than 10 years, we consider that you've had the benefit of your stamp duty and you now start paying land tax. For older people that don't have the income to pay land tax, maybe on sale, you recoup that land tax initially. But not having stamp duty should also encourage those older people that are in homes that are way too big for them to downsize into something more appropriate. And I think the other big one that I always talk about around this is the pension asset test.
Yeah.
Family home is not included in the pension asset test. So you've got people that have got no cash. They've got, they're still getting a full pension, but they're living on a property that's worth $3 or $4 million. Now, if that was actually in the pension asset test and you didn't have stamp duty, those people would go, you know what? This doesn't make sense for me to sit in a 5-bedroom home all by myself or just me and my partner. Let's move into something smaller and more appropriate.
Yeah, I have asked that point. I've got a lot of anger of it. Just also the other part that comes back to me on the exact same point is you talked about, not having the income and revenue, but also does it create another level of increased affordability? Because then you don't have to put, the 5-6%, depending on which state in the country are and how much you're buying, into your budget. You've actually got that capacity now up. How do you argue that? Does that also cause an increase in pricing because that group of people that would have been capped out by having to factor in stamp duty are now no longer factoring in and jumping up price bands? How do you talk about that point?
You could manage that with changes to macroprudential policies not that anyone really likes that, but that would definitely be an option. But I would also argue that, yes, you don't have that upfront cost, but your ongoing running cost of your house is higher because you're going to have that land tax burden every single year. So you can get into the market sooner and you can borrow a little bit more. That can be managed. We want people to get into home ownership sooner. But in terms of the ongoing cost of running that home, that's now going to be higher as well. So maybe you go and talk to the banks and say, well, yes, borrowing capacities have increased, but you need to factor in more what the ongoing costs of owning this property are. and those ongoing costs are now higher. So you could find a way, I think, that they net each other out. And I think that's what you would basically have to look at, because I do agree. If you just got rid of stamp duty, someone buying $1 million home, they go, great, I've got another $50,000 now I can spend.
Yeah. So that will be the question going forward. But I completely agree in terms of it makes government revenues much more stable. They're not therefore open to price fluctuations or price movements in the market. It removes barriers to entry and barriers to movement because, again, it's a transactional tax gone. So that's there. I want to pause that because I need to come to the elephant, gorilla, ginormous dinosaur in the room that we haven't talked about yet, which is investing and negative gearing. And where that now sits into it. We talked before about unproductive assets, the fact that basically people are buying properties, sitting on them, allowing them to appreciate, and then flicking them out. What is your take on negative gearing first and foremost? Do you see it as, a perfectly legitimate way of generating wealth, or is there other things to it that needs to be addressed?
Look, I mean, you can negatively gear other assets other than property. Obviously, property is the favored one. So I guess my issue with potentially removing negative gearing is you're complicating the tax system even further, and you're potentially favoring one asset type over the other. In saying that, I think, I think we've got to question people that own, 20, 30, 40 properties and are negatively gearing all of them. Is that really what we want? I don't have too much of an issue with someone that owns one investment property. And I also look at negative gearing in the capital gains tax discount as the government's not going to provide rental housing for you. So we have to give someone an incentive to provide that rental housing. Look, I think the whole tax system needs a review, and I think the tax system related to property needs a massive review as well. In terms of making housing more affordable, I mean, most of the modeling says that removing negative gearing would reduce prices by about 4%. In terms of what it would do to the rental market, who knows? But if we look at Victoria at the moment, for example, they haven't changed negative gearing, but they've increased taxes on investors quite significantly. What that's done, a lot of people that own
the outflow is incredible.
They've offloaded it, but also you're actually seeing quite a lot of first home buyers coming into the market. So net, is that actually a bad thing if we're discouraging more people from investing and we're giving more people the opportunity to buy a home? I mean, I'd much rather more people own their home than more people have investment properties.
Yep.
We're also starting to see more build to rent becoming prevalent as an asset class here in Australia. Now, it's still very much in its infancy, but as that grows, maybe investment in residential housing becomes less attractive. My other point about negative gearing in the capital gains tax discount is the argument's always, well, it only will impact on prices by 4%. So we shouldn't do it. Well, 4% lower prices is better than nothing. We know that government revenue could really use that money quite significantly. So I did hear back in, I think one of the elections with Malcolm Turnbull, they were looking at limiting how much you could deduct, or looking at a policy whereby you could only have a certain number of properties that you could negative gear.
That's the one I was going to ask you about, because that clearly is one way to put it forward. You talked about the person with 20, 30 houses. Put them to one side, because there's only, I think it's under 200 people in the country with that kind of scenario. But it's those that have 5 or 6 properties. Do we then consider tiering the system? First one's 100, next to maybe 75% you can deduct, so on and so forth, until probably after 4 you hit 0 and no more deductions come out of it. Is that maybe a way of doing it?
I think that's something we should definitely consider, because I think, as we've talked about, houses are a shelter, and not enough people have their own home and their own shelter. And renting in Australia is often not a great experience. And I think most people would have a preference to own their own home rather than be renting. And I think there's definitely an argument that we should limit how many properties can be negatively geared. And I think a tiering system like you propose there probably makes sense. I think, if the government's not going to build social housing, and I think the government should do a lot more social housing than it is, and they're going to rely on private private individuals to provide rental accommodation. To own one, you need to give some sort of incentive for people to do that.
Yeah.
But I think when you've got people owning 5, 10 or more, maybe they're taking advantage of those incentives.
So the next part of that question also is using collateral, right? So the asset collateral side that comes with, once you start growing your portfolio, the ability to keep borrowing on that collateral and so on and so forth. Is that maybe the other part of the answer here? Is that part of macroprudential rules or other form of regulation rules to, inverted commas, and I'm very clear this comment is going to annoy, level the playing field when somebody's at an auction having a crack at buying their first home versus an investor who may have an asset backing of 4 or 5 properties that can allow them to borrow capacity further? Is that also part of the discussion? Because I know I get a lot of pushback when I mention that, but I'd love your opinion.
There will be massive pushback on that. But
there's huge pushback on it.
And I think it's something we should consider, because investors can't compete with, first home buyers can't compete with investors. Investors have already got a foot in the market. They've already got equity in a property. Their borrowing capacity is likely to be much higher. And they just have no chance. The only time you see first home buyer activity pick up is when it's much harder and there's a lot lower level of activity from investors, like what we're seeing in Melbourne at the moment. So I do think there is a good argument if the goal is to have a higher level of home ownership here in Australia, and I think it should be, is to find ways to level the playing field. And we've talked about limiting negative gearing, but also maybe limiting the ability of investors to tap into that equity, and how much they can leverage that equity to get into more properties.
I get so much heartache from the amount of rage that I get when I mention that. But hang on a minute, this has got to be part of the conversation. I mean, you're going up against somebody with a cash asset versus a growing equitable asset. You're always going to get the equitable asset that's going to win. I mean, so there has to be ways of leveling that playing field. That you have to have a certain amount of cash on the day. Maybe if it's 10%, has to come from cash, not from pure equity. Is also part of the consideration. We're skipping around it, so I want to come back to it. Rent vesting.
Yes.
It's becoming quite the craze. It's certainly becoming a TikTok and Instagram sort of thing for younger people, that they're actually turning around going, why would you ever own your home, rent it out, buy an investment properties, buy plural investment properties, that's deductible debt, and just live like this forever? I mean, there are some big hitters in this country now in their mid to late 20s, early 30s that are basically saying, this is how you'll become rich.
Yeah.
I'm getting worried about rent vesting. It's starting to really freak me out that there is a miscommunication about exactly what this is going to do.
Well, I think there's a bit of blind faith there that property prices are just going to continue to rise.
Yeah.
Now, recent history suggests that's the case. My view on property price growth from here is that prices will probably continue to rise, but they're not going to rise at the same pace we've seen in the past. And the main reason for that is affordability is already massively stretched. If you look, from the 1990 to now, interest rates have pretty much trended down. They can't really go any lower than they've been. So we're going to have more periods, I believe, where we're seeing interest rates rising than just falling like they have over the last 30 or 40 years. The other big drivers of why we've seen so much equity grow is most households now have 2 people working. We've seen a big lift in female participation in the workforce. We're probably not going to see as big of a lift in female participation in the workforce going forward. So household income growth is probably going to be slower. The one thing that's still strong, obviously, is population growth.
Yeah.
But at the same time, we've also seen, APRA, ASIC more willing to tighten lending as well. And I don't think macroprudential controls on the housing market are going to go away. So I don't think we can expect prices to rise like they have in the past. So that would be my first thing about rent vesting. I think rent vesting probably makes sense if you want to make money when you're young. But I don't know if once you've got a kid or two, I don't know that you want to continue to be renting a property. So look, I think there's definitely some valid reasons to do rent vesting, because when you're starting out, you can't afford to live in the suburb you want to live in. You certainly can't afford to own a home there. But if you've got the ability to get a home somewhere, get equity in the market, all the things we've just talked about equity allows you to do. It allows you to invest again. You can go on your overseas holidays. You pull some of the equity out of your property. It is pretty appealing. But these people better hope that we don't have a fall in property prices, because I do worry about the level of leverage that some young people are taking on in the belief that the property prices are only going to rise.
Or what we've discussed before, changes to the tax policies around negative gearing and all those kinds of things start to hit home, and they change it because, yeah, it's seen as this one-way ticket to wealth at the moment, and particularly here in this country. I don't think we've solved the housing crisis, but we've certainly given it a fairly decent crack, Cameron. So I'm going to finish up with what I always do when I have people on exchanges, which is, Cameron Kusher, if you're in charge for just one day, what would you do?
The thing I would do when I think about the housing market, and there was a great someone wrote on LinkedIn, I can't remember his name this week, about the fact that the system we have at the moment is not going to deliver us affordable housing. And I think when I look at what's happening with homelessness, what's happening with affordability of rentals, we need a non-market housing sector. And what that basically is government delivering housing for people that can't afford housing from the private sector. And that's a growing proportion of the population. So if I was in charge for one day, I would go about setting up that non-market housing sector that delivers affordable housing for people on low incomes, for people that are currently homeless. That's what I would look at doing. And look, the government doesn't have the best track record at delivering things on time or on budget. But what I see this could be is a partnership between the private and the public sector, using the private sector's ability to deliver housing at reasonable prices. I think we need those public-private partnerships. The other benefit of having that is when the market turns and it's not viable to deliver housing, like we've seen over the last couple of years, the government or the government in a PPP can continue to deliver housing through that period of time when the private sector is just not willing or able to do it. So I would look at boosting the non-market housing sector. I don't think we call it social housing because I think there's way too much stigma around that.
Yep.
But I think we need to have a proportion of new housing delivered at a more affordable price point that the private sector can't deliver, but the government should be looking at housing as infrastructure like it would a hospital or a school or anything like that. So that's what I would probably focus on.
Maybe we have fixed a little bit of the housing crisis with that idea. Cameron Kusher, thank you so much for joining Exchanges today.
Thanks for having me, Evan.
Big thank you to Cameron. It's a big topic, and he said very clearly, and so did I, we know that what we said will be controversial. We know what we said will create an exchange, the whole idea of this podcast, and that for him to come on and say that, I thank him so much to do that, because he's got some big ideas and incredibly even-handed ideas about how to discuss property in this country. So we said we're not going to fix the property crisis, and that's fine, but the discussion needs to be had. To you out there, as always, thank you so much for watching, listening, or wherever it is that you're doing this media. We love having you at Exchanges. It's becoming a really growing, amazing community, so thank you. If you haven't already, please subscribe or click onto whatever buttons you need to wherever you're listening to keep getting the Exchanges downloads. We love doing it. We want to continue to do it. We need to continue to grow, so please do that. If you've got any ideas or guests that you want me to get on, don't forget we have an email as well, exchanges@evanlucas.com.au. And again, thank you to Cameron. Thank you to you for listening, watching, and everything in between. But until then, we'll see you next week.